All right. Can you hear me, bro? Can you hear me?
Yeah, get you wanna get another?
All right, bro. How are you doing? How are you doing?
How are you? I'm good. How are you?
That's great, bro. I'm good as well. So, thanks for tuning in. Today we are going to talk about some trap setups and also for you and perfect entry, or better said, safe entry confirmation. Besides M&W confirmations, induction trends, fake breakout, and sellers and buyers traps, and yes, trap zones. So I'm pretty sure you was in our last webinar. So you might know a little bit about it, what we are trading and why we are took the setups we are actually take. So let's move on to the next one. We are starting with trap, shift, induction, and continuing the move. So trap, what are traps? Traps are common setups which we are trading, like the wedge pattern, like is shown here, where you make us came low, make a peak formation low, then driving the retail traders were thinking this could be a valid buy, drop it one more time to accumulate sell orders while hitting all the stop losses from the buyers from the previous low, and then making some kind of, let's say, this is our stop hunt, yes, which is literally always in free pushes to the downside. This works. Normally, it takes 3 candles for a stop hunt to get to this low, accumulating orders below the previous low, which is right about here. So imagine you as retail traders think, oh, all right, this is a nice support zone, so I'm willing to buy. You get all confirmations, which is literally 3 times by a trend line to buy more. So this is the point where market makers came in to trap you and to hit your stop loss. Come down, this is our stop hunt. Then building a W formation or just let it be as a stop hunt and then came up. Or the other version would be they come down, accumulating 3 times, drop, making the W one more time lower, and then moving up. So I don't know if you already have back tested it. I think so. So you might see those patterns very, very often. So this is literally our trap area where most of the retail traders get trapped. So trap. So I will mark this up. Make a little more. This. So this is the trap. So Gus, what is the shift? What is the shift? The shift is this move, this breakout, this reaction to the problem. The next one, would be the induction, which would be coming after the stop hunt. So this one would be the induction, where we get as traders the confirmation to buy. So after this, when market makers came one more time lower, accumulate more sellers while trapping all these buyers below this zone, they come to push up and move the price against retail traders first. So if we are going at the markets, let's look for the setups, yes? Let's take a moment and look for the setups where they are actually playing out. Let's delete this one and get a clean chart. So I will delete all this stuff. So if you see here, one more time, the wedge was building up. Market makers came down, make this low. This could also be type of W formation, but yes. So they came down, make this low. 1, 2, 3 times. This is where retail traders are getting the confirmation to buy, while market makers came down one more time. Introducing some retail traders to sell before the actual move is starting with the W right about here. So in this case, you could get a good risk-reward ratio. Let me point this out for you right about here. And going for the, I would say the last, or better said, our take profit zone is always the previous high of the day, of the week, or of the month, if you see this pattern. This is a pattern which occurs on all different time frames, so you don't have to just stick around to one pair or one asset. So you can even use this setup on stocks as well as cryptocurrencies as well as commodities. So yes, look at this. We get a perfect entry and made about 800 pips. So this is easy. This is easy. So you have a risk-reward ratio from 1 to 8. So let's move on to the next one, where we are talking about the rejection which is coming after it, which would be also a confirmation for us to buy. So if market makers, like here, build up this zone, where most of the retail traders, which are still in a sell position from this previous trend here, something like this. So when you see this type of rejection, what would you actually do? As a beginner, you would say, yes, I would sell because, you know, we saw gold falling down. And yes, why not selling more of this shit? Why? So yes, if you see some type of this rejection here in this zone, you know, people get trapped here. People get trapped. Some are still selling and some are smart enough to see this rejection zone, which becomes our entry zone right about here with the signature trade we made here up, and just test it, but don't break it. So this is another confirmation. If a zone is builded but it's not broken, it's a confirmation for us to buy or to sell in this point. So where put the retail traders just stop losses that got the sell trend? Let's move out and let's see. We are looking for liquidity zones or trap zones. So the liquidity zones become always a trap zone once this area is hit and worked. So let's see. I think this one is also a nice one. While this one would also be interesting. Yes. So let's get on the 1 hour chart. So as you see here, we are using the support and resistance levels to get our entries better. So because at these zones, which was previously a support zone, become a resistance zone right about here. So we know if this level is worked, then most of the time there comes a trap with it, as you see here. This one was a support which became a resistance zone. market makers came up, worked a high, made also this wedge pattern with a fake breakout to the upside, like this. Hit it one more time, all the stop losses from previous sellers, previous buyers and sellers from this point here, while introducing with this little doji, I would say, right about here, which is also a fake breakout, more buyers. So where put previous buyers the stop losses, I would say, if they get in here, at the low of the day, I would say few pips below this point. So if you get another entry, which is also, by the way, a multi-session M formation, another one valid point for us to sell, another one, I would say, confirmation for us to sell. Could you easily get if you're selling on at this point 430 pips, which is 1-to-4 risk-reward ratio. So these are the kind of trades we love to do. Let's move on and look for other setups here. So the most important thing you have to do when you go on the charts, first you have to watch for, I would say, pump and dump for the weekly structure. So you get a trend line setting up, and then you look for trap zones, which is for retail traders, support and resistance. So once this support and resistance has become trapped one more time, market makers are always coming to a point where they are, I would say, building this trap pattern here. And let's take a look on other pairs, like the Euro USD. So the exact same thing as on gold, we see right about here on Euro USD. Market makers came down the whole week, accumulating sell orders, rejecting the zone, the low of the week. Let me delete this one so you can see it clearly. Yes, I think that looks good. So for all the people who had the trend lines setting up like this, they got confirmations to buy at these zones. This is, if you see this type of, I would say, induction trend, you know exactly what the market makers are going to do the next step. So let me point this out for you. Retail traders are buying, willing to buy at this zone. Retail traders are willing to buy at this zone. Retail traders are willing to buy at this zone. Retail traders are willing to buy at, let's see if this makes sense right about here. Yes, this makes sense because it is a previous support level for retail traders where they are looking for buy opportunities. Yeah, if you can say something like this. So the next step we are doing when we see this, we are looking or trying out different trap zones. So this one here is a support zone for retail traders. This one here, and like you see, this once was a support zone which became the resistance zone. Also, market makers make that M formation at the high of the day, which is, by the way, I think also a retest of the DMAs, which would be another confirmation for us to sell, while all those buyers from these levels get trapped. So one more time, retail traders want to buy here at the zone, get one more time trapped before the initial or the real reverse of the trend is happening. So if we come to this zone, what do we see here? What do we actually see here? Actually, we see problem, reaction, solution one more time coming down, making a W before we are going upwards. This is the time of rejection we are always looking for when it comes to midweek reversal, which is literally Tuesday, Wednesday, and Thursday, while Friday and Sunday, Monday are most of the time trap days. So if you can get an entry here for buy, let's say this zone. So yeah, let's say we were taking this one. There would be 320 pips for, let's say, 10 pip stop loss or 20 pip stop loss maximum, because you don't need bigger stop losses by these setups. So this is amazing. If you want to hold it, then I would wait for the DMA crossover, which is happening here in this zone, while the DMAs got, I would say, rejected and accumulating on the zone and retested, you got another entry or entry confirmation to buy. So if you're looking for the next zone, which would be probably here, you could make 450 pips. You know, so retail traders are buying here, placing their stop losses below this zone. And this is why market makers are coming down. So 1, 2, and 3 touches is a valid confirmation for them to buy. Always, always remember the, remember the 3 touches for you as a confirmation to go on the other side. So this is a weekly pump and dump structure, which we are seeing here. Where market makers came to this zone, broke it, building that M formation right about here in the zone at the high of the week, coming down, the shift. Then comes the induction, which is here, right about here. When the induction is done, retail traders are buying at the zone, which is a support for them as well again, accumulating orders here and then drop again. So if you didn't got this entry right about here, you can look for the DMA. DMA crossover is already happened. So the next thing you are going to do is waiting for the retest, or I would say our Hegelian dialectic setup with the problem, reaction, solution. On the other side, when you see a downtrend, it will look something like this. But as we are, sorry, otherwise. So let's delete this one and put it into here. We put it into here. We put it into here. And again, we see a type of rejection zone right about here. So what we are going to do, we are going to buy at these zones. We see market makers came down, worked this zone, but didn't break it while it was working yesterday's low, we're looking for a buy. So where's our take profit zones? Say here in this one. Here at the high of the previous week. And even higher. So, but this one would be our two targets, the targets. And another time, our stop loss would be 20 pips from this zone to get 356 pips. So, you know, these are the kind of setups we are looking for. So let's go to the next one point, which is M&W formations at these trap zones. So while we are using the trend lines to get a better, I would say, view what is happening, market makers come to the trend lines and building their traps. So a trap is literally a fake breakout, which appears on these zones, where retail traders think, all right, this breakout we are going to buy. Yes, I don't know why they are doing this, but I think that is what they learned from baby pips, which is, in my opinion, pure bullshit. And I don't know. I don't know why so many people are trusting baby pips, because this mainstream propaganda from brokers and stuff like this, where they teach you how to trade to lose money. You never will make money using baby pips or free stuff like this, because this is stuff everyone can find on Google. You know, how to trade support and resistance. Let's Google for it. Let's Google for it. So this is information everyone gets for free. So let's now imagine, why should a broker or should someone give you your hard-earned knowledge for free, you know? First, this is the kind of bullshit. Because if you want to make money, or if you make money from it, they wouldn't give you this for free. So, and this is also with news propaganda. So I don't know, I'm not watching the news, because in my opinion, when, let's say, we have high impact news, yes? Let's go on Forex Factory. So let's say NCD news for today. I don't know how to say it. Imagine you're watching the TV and you see, all right, they are going to talk about the NCD news, and that the economy is becoming great, and so they will let you think that you should buy. While this is, I would say, a big lie, a motherfucking big lie, because market makers and brokers and banks are paying media to spread fake news. And this is not only for the financial markets, this is for every kind of, from economy event or world events, like, which was it here? I don't know. Let's say, I think oil was this. Let's take a look at oil, so you get a better understanding of market manipulation while using those high impact news. Where it was. I don't think it was on crude, so it has to be happening on Brent. in January. Yes, this one, right about here. So this was when Iraq was attacked by the US, and their officer, the field officer, their army guy was shot down. So as you can see here, what do we see here? What exactly do we see here?
It's always going up as a fake trend, and then it's going to fall off.
Yes, exactly. So we have another wedge pattern right about here, forming that, coming down, making that low, fake break out the low. So everyone was selling here, while we know market makers are willing to come up one more time, which caused the news, yes. So by the way, introduce more buyers while breaking out at this zone with this candle here, and then reverse the whole market, as you see. So this is one of our most powerful setups you can ever have. While this is not only a wedge pattern, this is also a macro, or I would say a multi-session information. Here's first high, second high, breaking down, reversing the blue trend. So our take profit zones for this trade, no, it's not loading, more data from the past. But our first take profit zone would be here. And people are starting to buy at this zone, yeah? They are starting to buy. So market makers came to this level, give them retail traders, yes, let's say here, give them retail traders confirmation to buy that this zone is valid while trapping it. So this is a liquidity zone which became trapped. So, and here you see the DMA crossover, so you can get in. You didn't have, well, with patience, you could get in better entry, but I wouldn't recommend to get in, even if this looks good for me, because at these zones, more can happen, you know, but another one time, support became resistance, trap zone. This kind of rejection zone is also valid for us because it includes a stop hunt. Remember, stop hunts at these zones are always confirmations to us. So they came up, worked it low, break out, and then DMA crossover right about here at this zone. Here, retest with the W formation, and easy profits. So you can get in here. So after the stop hunt. Then your profit would be here, take profit area at the previous high of the day. But if you have, if you are more patient and need an extra confirmation, I would say always wait for the crossover of DMAs and the retest. So at the retest, you have to have one thing in mind. One little thing you have to keep in mind when it comes to these crossovers. So So what would we do here? Would we sell the buy candle or would we buy the sell candle? in this case?
I think we'd sell the buy candle.
Yes, that's it. At this point, after the retest, we would, oh no, that wasn't right. We would buy the sell candle. So, yes, sorry. As you can see here, if you buy the sell candle, you could get in here or here with a tight stop loss. You could make a bunch of profit. So let's have a look for another ones like this. This would be here also legit. Let's delete this one. We don't need this word about here. DMA crossover. High of the week was already made with a trap. Then it comes to the retest. Yes, here, making that information at the high of the day drop again. that's it. So, and if you didn't got the information, this retests would be also valid. So, what do we do here? We sell the buy candle here, or if you want to get the second leg of the information, which would be, I would say, a much better confirmation for us. You could get another one pretty good trade. Take profit zone, previous zone. It's here, yes. So this would be our first take profit zone. So, but we know 3 times they already tested, oh yes, maybe 4 times. But I would say 3 times is better because this was the break of the stop hunt. The zone gets trapped. So retail traders are buying, market makers giving them confirmation, while price is below the DMAs, retesting it and respecting it. And you could sell all these buy candles here if you didn't got this M. And go for the fullest. Look at this. This is how powerful DMAs are. You literally can get, after the trap has been set, the whole trend with different confirmation or re-entry confirmations. Another one type is right about here happening. Rejecting the zone. Breakout one more time. While this is also one of our problem reaction solution setups. Come down, stop hunt the zone, and remove the whole trend, which is, like we said, daily structure on the markets, yes? So if you didn't got this, another one time, you get a DMA crossover, you get a retest, and we buy the sell candle one more time again. Safest entry. I have to change this to a long position. That's it, bro. That's it. You can even go more higher to the next zone, which would be here, which is, in my opinion, damn good zone, where support becomes resistance, and after this support then becomes resistant, there is a trap. Another one beautiful trap, which is setting up right here. We'll see one more time again. Market makers came up, market high of the week or of the day. Week, I would say, yes. So fake breakout in this one, while stop hunting also. And our next trade is playing out. Let's say entry here. Keep it slow. This one would be a take profit zone for us. This one as well. And this one here as well. So until this zone, I would definitely sell. While we also got another confirmation after this trap has been set it up with our DMAs. One more time again. DMA crossover, retest. Boom, drop. Support zone is building up. We are seeing the same happening right about here. Coming up, dropping hard. So until now, I hope you understand the basic concept of it. Let me know.
Yeah, I get it very well. Thank you. It's just that I'm at a place where it's very noisy, so I actually muted my speakers, but I get you very well.
Thank you. All right, that's good. That's good. So we only have 2 minutes left for our webinar. So yes, I would say thank you for your time and thank you for listening. I hope you enjoyed this webinar. And
Thank you.
Yeah, with pleasure. With pleasure. I was pretty excited when I saw yesterday your analyze and how good you do it. So yes, this was a gift from me, and I hope it really brings you forwards. Tomorrow we will have another live session with everyone from the groups and also with Kashif. I would love to see you here. If you didn't get or I don't know if you already checked out our YouTube channel or Facebook and stuff like this, you can comment, you can like, you can share your experience with us. And yes, one more time, thank you for tuning in. It was a pleasure for me.
All right, thank you very much. I actually saw your YouTube videos and I've been looking at them a lot lately. And yes, I'll comment. Thank you.
All right, all right. Then have a good day.
You have a good day as well, sir.
Thank you. Bye-bye.
All right.